Carve up the world. They say what it's going to look like, who's going to control what. Those who have money have power, a certain type of power. That power has to do with all that they can buy, but it also has the ability to influence those with political power. And so you see this throughout history, this symbiotic relationship, for example, between the royal families, the nobility, and the church. In 1668, after 30 years of war, the development of nation states. Before then, it was really the development of countries as we know it, that there were borders. There are two orders. There's an internal order, that is the internal governance system, and it's usually set out in a constitution or some agreements. And then there's the world order, how the world system. So, for example, in 1945, at the end of a war, which is basically a fight for determining the world order, the winners of the fight got together and created the world system as we now know it. 44, they created the Bretton Woods monetary system that determined the money, pretty much. And because the United States won and had 80% of the world's money, gold was money then, and it has 80% of the world's gold, and it was half the world's economy, and it was the great military power. The order was built around an American world order, so that the United Nations was in New York, the World Bank and the IMF were in Washington, and they built that new order. So classically, you have a war to determine whose rules we're following, and then you have the new order being constructed. After that, there is usually a period of extended peace and prosperity. Peace suits prosperity. And so there's not, and the reason you have the peace is because no one wants to fight with the dominant power. You know you're going to lose. You've surrendered. There's been the surrendering. They carve up the world. They say what it's going to look like, who's going to control what. And then you come into that period of peace and then prosperity, where then there's a working together. Usually at that point, you've wiped out a lot of the debt. You've wiped out a lot of the issues, the class warfare and so on. And then there's good working together. So those great periods, such as the Industrial Revolution in the late 1800s, or what we've experienced in the post-World War II period, are peaceful and prosperous periods led largely by the dominant world power. Over a period of time, since really 1500, and maybe before, but really 1500, when the Dutch invented capitalism. And what I mean by that, they invented the first capital markets, the first stocks and the first stock market. That since then, capitalism has been an effective tool for building wealth because it got resources into the hands of inventive people. That's when we moved from agriculture to the importance of inventiveness of people. They got resources, and then they built that prosperity. In that process of doing that, they create wealth gaps naturally. Those who make a lot of money make a lot more than those that don't. And it also produces opportunity gaps because, for example, those who earn a lot of money, have that wealth, they have the power to educate their children in a way that others don't. And the gaps grow. And also the debts grow at that time. And when you have a world reserve currency, that allows you to borrow a lot of money because those who want to save want to hold your money, and that means that they'll lend you money. And so those countries get deeper into debt. So you see that they gradually lose their competitiveness and they get themselves into financial circumstances which are not good, and they have large wealth gaps, which set the stage for downturns. The first question is, do they have enough money? And traditionally, money is resources. So you classically see that the coffers are bare, that they're spending more money than they are earning, and they run out of money in the coffers. And their granaries are empty rather than stocked, so that they give them the buffer. And as that deteriorates, that worsens conditions. And if they have a rival power that's also challenging them, they see greater internal conflict over wealth. And then they have the problems internally and the problems externally, which usually results in an internal war or an external war that leads to the change to the New World Order. There are cause-effect relationships. Everything that happens has reasons, causes that preceded it, that made it happen. And so by having all those in numbers, one can see the probabilities of certain things happening. In many cases, the conflict that produces the revolution produces revolutionary changes that lead to resolutions and lead to new starts. And so they're short-term, a short-term civil war is a hellacious experience. And at the same time, it can be the transition to a new beginning. Also, there are different types of conflict. Competition, which makes everything better, is a productive conflict, whereas destructive conflicts are not good over the short time. So, that's how those go. The most important leading indicator is the quality of education. Most importantly, broad-based education drawn from the largest population, because you can never tell who the talent is going to be, so where they're going to come from. So, for example, if you look at the Chinese dynasties, the great Chinese dynasties, and the Confucian approach, it was meritocratic of everybody could sit for exams and so on, broad base of drawing in the populations. And you see that if you go across societies, because that draws on the largest number of population to get education. And it also, that creates a reality and a perception that the system is fairer, equal opportunity, not just one of privilege. And that helps to create social stability. But education is not just education in understanding facts and so on. It is education in civility, of how to behave together. And so if they're smart, they understand how to be productive because they work well together and they're productive. And then that leads to the next stage. You could see in the lines in the charts, I plotted these so that you could see in a typical cycle, you could see that education is the long leading indicator. And then you could see, as you mentioned, that what you see is inventiveness and technology measures then follow. And you see then also competitiveness in world markets follows. For example, in the early stages of a cycle, the industries that they go into tend to be very basic industry because they have cheap labor, something like textiles and simple manufactured goods and so on. But as the education rises, then they move up the value chain to greater technologies and so on, which raises incomes and raises productivity. So yes, those and as you say, there are 18 different measures like that, but education and then civility and the inventiveness. So you see it reflected in who's inventing what. And that corresponds then who's trading with who's a big trading country, and where's the value of economic output, and what are per capita incomes. They all follow those arcs.